Markets head into Thursday with the dominant theme remaining a weaker U.S. dollar after another round of softer than expected U.S. inflation data reinforced the view that underlying price pressures are gradually easing. Following Tuesday's downside surprise in CPI, Wednesday's producer price data also undershot expectations, pushing Treasury yields lower across the curve and encouraging investors to increase expectations that the Federal Reserve will be in a position to ease policy further before year end. That backdrop has weighed on the greenback and provided broad support for the major currencies and risk assets. Across FX, sterling has been the standout performer, benefiting not only from broad US dollar weakness, but also from improving confidence in the UK's political outlook, with markets viewing the expected composition of the next government as supportive of fiscal stability. The euro has also gained as lower US yields improve relative rate dynamics, while the Australian and New Zealand dollars have extended their recovery on the back of the weaker dollar and improving risk sentiment. The Canadian dollar firmed after the Bank of Canada left rates unchanged, while acknowledging that economic growth appears to be regaining momentum, although policymakers remain cautious given lingering inflation risks tied to energy prices. On the central bank front, Federal Reserve officials continue to strike a patient tone. New York Fed President John Williams reiterated that inflation remains above target and that restoring price stability remains the priority, while Fed Chair Warsh largely repeated his recent message that policy will remain data dependent and that the Fed stands ready to act if inflation proves more persistent than expected. Importantly, neither official delivered fresh hawkish surprises, allowing markets to maintain their more dovish interpretation following this week's inflation data. Geopolitics continue to be a main source of market focus. Oil prices continue to trade at elevated levels as markets monitor the evolving U.S.-Iran situation, although there were tentative signs of de-escalation after Iran released an American citizen and President Trump acknowledged the move as a gesture of goodwill, while also suggesting Tehran wants to resume negotiations despite further military operations remaining under consideration. Those mixed signals have helped prevent another sharp spike in energy prices, but continue to keep inflation risks firmly on investors' radar. Overall, the combination of the softer U.S. inflation, lower bond yields, and a weaker dollar continues to underpin risk assets, although geopolitical developments in the Middle East remain a key wildcard capable of quickly shifting market sentiment. That's all for now.